Hi, and welcome back to Elements in Focus. My name is Aaron Rheaume. I'm the Director of Financial Planning. And as always, I have with me Grant Sullivan, our Manager of Advisor Operations. Grant, how are you today?
I'm living the dream, Aaron. I appreciate you asking. How are you, brother?
I'm well, man. I really enjoy our time when we get to do these together. I think they're very educational and we have a lot of fun doing them. So, as Grant always opens with, we talk about our five critical elements. And in this topic, we'll be covering risk management and life happens. And so, one of the big things in our world is looking at insurance planning and making sure things are properly put in place. However, a lot of times when Grant and I are reviewing our current family's insurance or prospective family's insurance, we uncover some things that make us question or really just go, what was going on in this situation? Did the insurance agent recommend this? How did you make the decision to get to this point with your insurance planning? And so, Grant, you have something that you want to talk about in the insurance side. So I'll go ahead and turn that over to you.
No, thank you, Aaron. And I appreciate it. Folks, you don't want to get caught in insurance games. So, what I mean by that is sometimes insurance agents trying to get cutesy with dolling up some of the products that they have. And the insurance world's kind of boring, to be honest. It's really here's an insurance product, does it fit the need? And in order to get insurance sales made, they'll come up with different strategies and scenarios that sound good or even look good on paper, but can end up harming you long term. And so, a situation that we have recently found, and I don't ever want someone caught in this game, is that an insurance agent was trying to help a family find ways, find capital to create an insurance plan to meet a different need, and felt it was appropriate to not follow certain procedures. And now, unfortunately, because of the cutesy games they were trying to play to get the job done, this family is going to have a substantial tax bill arrive on their 1040 when the policies they originally had go to lapse. And so
Hmm.
it's an unfortunate situation. I hope we've caught it in time to help the family unwind what's been done and to go through and start repairing the damage that's been done. But again, insurance should be simple, and games that get played often cause family harm. And so we don't want you to if go with your gut, right? If your tummy says, "Hey, this doesn't feel right. I should probably be asking more questions, but I don't know what to ask." Stop the process and contact a group like ours to ensure that you're getting true fiduciary coverage and you're not going to set yourself up for a potential disaster down the road.
Grant, you made a comment about money going on their tax return. How
Mhm.
in the world in the insurance realm can that happen? Because a lot of times when people are sold insurance products, they're doing it for tax diversification, right? Or future tax-free income coming from the product itself.
Right. And Aaron, for everyone that's on or listening, just remember there's no such thing as a free lunch. Insurance salesmen love to talk about how insurance products are tax free. Well, yes, under the right circumstances, which happen most of the time, death benefit from an insurance product is tax free. There's a way that that can be messed up as well. So make sure that your beneficiaries are one person and the insured and the owner of the policy are a single person as well. If any of those three people are different, you've now set yourself up for a tax disaster. Well, in this situation, when you have cash value accumulating in a policy, you can borrow from that cash value and not cause a taxable event. Now, you can either repay yourself so the cash value doesn't get too low that the policy eventually lapses, or you can pass away and they'll reduce the amount of death benefit from the cash value you've borrowed. And every policy is different, so you've got to understand the fine print. And as Aaron in this specific situation, a lot of cash value was borrowed from policies that shouldn't have been. And now, because of how the policies work, the cash value can no longer sustain the premium required to keep it alive. Therefore, the policy is going to lapse, now creating a pretty substantial tax liability for the family.
Wow, sorry to hear that. And as Grant mentioned, no two insurance contracts are alike. And so if you do have questions or want to have things reviewed by a fiduciary, we would love for you to reach out to us at 800-928-4001. You can look us up at yourlifeafterwork.com. We have a ton of content, articles, and also if you want to hear more, feel free to check us out at any of the podcast services that you can see on the screen, or catch one of our radio shows that is broadcast all over Indiana. So thank you for listening to us. If you have more questions, please feel free to reach out to one of the advisor team. We're more than happy to help you. Have a great day.